Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Hilliard MacBeth, author of the second edition of the book, When the Bubble Burst, Surviving the Canadian Real Estate Crash. He's also a portfolio manager and financial advisor in Edmonton. Welcome back to the show, Hilliard.
Nice to be talking to you again.
Hilliard, people in Alberta are wondering if the federal cabinet will approve the Frontier Oil Sand project. It'll be one of the biggest in the world. It's already passed all the regulatory hurdles, but it still needs cabinet approval. What do you think is going to happen?
You know, I don't know what the final decision. Apparently, it's going to come before the end of February or by the end of February, and I'm not quite sure why Teck is pushing it so hard to get approval, because in the current environment, with the oil price where it is and the difficulties with pipelines, it's extremely unlikely that it'll be built anytime soon. So it seems like they want to get the final approval so that they can put that on their list of projects. But even Teck, the CEO of Teck, said recently it needs a much higher oil price for it actually to be financed. So Teck doesn't have the money to go out and just build it themselves. They have to borrow the money or get new equity capital into the company to build it, because it's a very large project. I don't know, more than $10 billion. And they don't have any partners, and it's going to be difficult for them to get partners. So it's kind of something that I guess was just going to sit on the shelf. And so I don't quite understand what the urgency is, but there seems to be a political component to this, which is much bigger than the economic component. I guess that's probably what it is.
Across Canada, we're seeing protests by natives and native supporters against the natural gas pipeline in northern BC, which again has court and local native approval. The elected bans, but a handful of hereditary chiefs are against it. Is this one of the things that makes it so hard to get energy around Canada?
You know, up until now, it's worked pretty well, but the last 3 or 4 years, it's a combination of people who believe that the fossil fuels should just be left in the ground, stranded assets they could be called, and then concern about crossing lands that are owned. Some people believe they're owned by the Aboriginals, not by the government of Canada, because the BC Aboriginal people never signed a treaty with the Crown, so every project has to be fully negotiated individually. So it's really become difficult to get these projects. But you know, again, like the Frontier project, there's another element, which is the economic element, and the economics of these. There's a huge amount of natural gas in northeastern BC that needs to find a place to go. But the question is it economic? Because you got to build a pipeline, then you've got to compress the gas from a gas into a liquid, then you got to load it on the tanker, then you got to send it to Asia, mostly China, I guess, is the big buyer, and Korea, Japan. So there's a lot of competition. There's the Middle East, and now the new one, and it's a big one, is Texas. So Texas, they're getting a huge amount of gas associated with the shale oil that's coming out of the Permian Basin in Texas. A company called Kinder Morgan, not the Canadian Kinder Morgan that everybody knows, but the parent, the U.S. Kinder Morgan, is actively building 2 or 3 pipelines right now. They just announced recently they think they need 2 or 3 more pipelines to ship this natural gas to the coast. Then it's going to be loaded into these super carriers for liquefied natural gas, and it's probably more economic than anything Canada can do. Australia's got huge natural gas liquefaction projects that are already completed and in practice. So it's almost like BC is too late to the game and perhaps not economic.
Well, it's not like Japan wouldn't like natural gas. They're doing something like opening more than 20 coal-fired power plants to replace the atomic plants that were closed due to the earthquake. So natural gas, I think they would like it instead of coal if they could.
Yeah, but they're not going to pay 1.2 times the going rate to Canada just because the cost is 20% higher. They're going to buy it at the cheapest place ever, unless you can get them to invest in the project. And I think they have invested. There are some foreign investors in one of the plants at the coast that is under the very early stage of being under construction. But it is a challenge. I mean, people are looking around and saying, boy, is there ever a lot of gas coming our way, and maybe we can negotiate a better deal. And so the finance people look at this and say, okay, if you can get a 30-year contract at this price, then we're willing to back the many billions of dollars needed to build the plant and the pipeline. And that's another factor, obviously, in that is what are the difficulty of getting approval to transit the lands that is needed. And so all of it together, you could see people saying, well, there's easier places in the world to get our natural gas from. We're going to look elsewhere.
We'll have more with Hilliard MacBeth right after this.
Aben Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Aben's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at abenresources.com.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlin, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Welcome back. We're speaking with Hilliard MacBeth. Hilliard, the Toronto Composite Index hit a new intraday high. Why is the Canadian stock market doing so well?
It's a bit of a puzzle, and there was a comment on from one of the world's largest hedge fund manager, Ray Dalio, this morning, saying that the reaction from the coronavirus is overdone, but there hasn't really been a reaction in the market to the coronavirus. I mean, obviously it would be a negative reaction he's talking about, and both the U.S. and the Canadian stock markets are either at record highs or very near record highs, so there's been no real sell-off. I checked back this morning, and under SARS, it was a 16% sell-off. You can't be 100% sure it was all attributable to SARS, but there was a 16% sell-off over that period. So there hasn't yet been any real impact from the coronavirus. So it's a puzzle. I don't know why. I think people are assuming that the coronavirus is going to fizzle out. Already the number of deaths is well past the number of deaths in SARS. SARS was about 800 and the coronavirus is at 1,000, and obviously it's not even close to peaking yet. So we'll see. But it is kind of a bizarre reaction. And the other thing too, of course, is it depends on the economy in China, because Canada, as I wrote in my book, is just a play on China. And I know that's, initially when I heard that, I thought, that doesn't make sense. Canada sells very little to China, but the reason that statement has some truth to it is that China demand for commodities is the key factor in keeping the price of commodities higher. So if China demand for commodities, which is imports into China, weakens because of a virus or because their economy slows down from 6-7% down to 1 or 2% because of a virus, then the price of commodities will drop, perhaps just temporarily, but they will drop, and that'll hurt the Canadian stock market quite a bit. Oil and gas, mines and minerals, all kinds of commodities will get hit. And then, of course, Canada's viewed as a commodity. Commodities aren't as important as they used to be in Canada, But from the worldwide investor point of view, Canada and Australia are still very much viewed as commodity suppliers. So, but so far that reaction hasn't kicked in. So people must be thinking that this is a very short-term impact from the coronavirus, and it's not likely to impact the China economy very much. But that doesn't actually make sense. So I'm puzzled.
Well, we're seeing supply chains around the world already affected. They can't get parts out of China.
Yeah, and all it takes is to shut down a multi-billion-dollar assembly line. It just really takes one of the components to be unavailable, and you have to shut down the whole line because you can't keep producing the product, whatever it is, without that one component. So even auto parts, I didn't realize it, but even auto parts in phones and things like that, a lot of them have components from China. So, and this is just anecdotal, but it seemed to be very valid. I was watching one of the business news networks this morning, and they were interviewing a guy from China. I think he was in Shanghai, and he makes motorcycles. But he wasn't Chinese; he was American, I think, or maybe European. And they said, "Are you going to reopen your plant?" And he said, "I'd like to, but I really depend on migrant workers, and most of the migrant workers come from the interior, places like Wuhan. And as far as I know, they're not coming back anytime soon, so I won't be able to reopen until they come back. And will they be allowed to travel to the coast? Well, I don't think they're going to be allowed to travel. He didn't say this was what I'm thinking. I don't think they're going to be allowed to travel until they're sure that the virus has kind of run its course in Wuhan. So we'll see."
We'll have more with Hilliard MacBeth right after this.
Cypress Development Corp. is developing a world-class lithium resource in the heart of Clayton Valley, Nevada. The size of the resource makes the Clayton Valley project a premier asset with the potential to impact the future of lithium supply. Cypress Development Corp. trades on the TSX Venture Exchange, symbol CYP, the OTCQB, symbol CYDVF, and on Frankfurt, symbol C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Hilliard MacBeth. Hilliard, Canadian National Railway says it may stop running some trains because they're tired of their passenger and freight trains being blockaded by pipeline protesters. What's that going to do to the Canadian economy that really relies on a lot of rail traffic?
Yeah, the most important factor in the Canadian economy, arguably, is, well, probably the most important factor is real estate. But the second most important factor is export of oil to the U.S. It pretty much all goes to the U.S., and the pipelines are full, and there's no new pipelines on the horizon except the Trans Mountain, which is still a year away or so. So any kind of expansion of the amount of product coming out of northern Alberta in the oil sands has to go by rail now. And there's a huge loading facility in eastern Alberta at Hardisty that takes this stuff and puts it on. But the problem for the railway is they have to figure out how much space on the railway. There's a limited amount of space they can allocate to these trains that carry bitumen because they've got other products. And they don't want to build more line because sure enough, they'll build a bunch of new lines. And then the pipeline will appear, and then they'll say, sorry, we don't want to use the rail anymore. Now we're going to use the pipeline. Because I haven't seen this printed too often, but people probably don't realize it. But it's 3 times as expensive on the rail versus the pipeline. The pipeline's about $5 a barrel, and the rail's about $15 a barrel. So understandably, the railways are getting pretty stressed about this, and of course now the good news is because China isn't buying Canadian canola as much, there is some space on the railway for now, but it's going to become increasingly difficult. And the other problem, of course, that we've talked about before on this show is Canada by far is the biggest exporter of oil to the U.S. It's about 3.5 million barrels a day. None of the other exporters to the U.S. is even, all of them are well below 1 million barrels a day, and then most of them are down in the $100,000 to $200,000 barrels a day, including Saudi Arabia. So the U.S. has expanded their oil production exponentially just in the last 10 years, from about 5 million barrels a day to 13 million barrels a day. They're now down to where they're only importing about 5 million barrels a day, and 3.5 of those 5 come from Canada. So there may not be that much more room for Canada to expand its exports of oil to the U.S. anyway, and it might even be something that could be shrinking in the future because the U.S. may not need it. Because the other thing is that the demand for oil in the U.S. has been flat for many years, since about 2015. There hasn't been any increase in demand for oil in the U.S., and it's starting to slow down. So the area where the demand for oil is still increasing would be China and India and places like that, but not in the U.S. So $15 a barrel when the price of oil is below $50 a barrel, the numbers just don't work. And but I'm sure that these other concerns like pipe blockades from pipelines and that's at the site are a factor as well. But I think long term transporting bitumen by rail is not going to be viable.
Don't they also face speed restrictions now for the oil tanker cars because they've had a couple of fiery crashes?
Exactly. So the one big crash that was many years ago was in Quebec, and the oil came north out of North Dakota into Winnipeg and then east to Quebec, and it was a horrible crash, and some people were killed. And then a more recent derailment, and people are getting concerned. So now the new speed restriction is 25 miles per hour in the I'm not sure why they're using miles per hour, but anyway, I think it was miles per hour in the city and 35 miles per hour outside of the city. So that makes the $15 a barrel number I quote even probably going to creep even higher if they're restricted to those speeds. So it's becoming increasingly annoying to the railways. Now, having said that, the railways did get some long-term contracts from some shippers so that they're not taking the whole risk of this themselves. Some people bought space on the railway, paid for it. They gave them a 20-year guarantee, so the railway was happy to accept that business. But the railway is going to get increasingly nervous that the demand of oil in the U.S. Shrinks to the point where they don't need our oil as much anymore, or the new pipeline is built, or something else is going to happen. And then if they keep getting all these restrictions slapped on them, it may not be worth it for the railway, especially if they get busy again on some of their other products, because they get a lot of flack from the farmers and the coal producers and the canola producers and all these people. And all of now they've got more and more finished products, containers as well. So, but if you in Alberta, if you just watch the trains go by, sometimes there'll be a whole train of oil tankers going by. So it's taking up a lot of room on the railway.
Hilliard, how are people feeling in Alberta about the economy there and their place in Canada?
Well, it's interesting. There's obviously there was a very heated election, a lot of rhetoric, but the thing that's surprising me a little bit now is the new Premier Jason Kenney in Alberta is continuing to keep the heat at the highest level against the federal government, and usually that's unusual. Usually after the election is over, it kind of calms down. They start talking quietly behind closed doors to start cooperating, but that hasn't happened. So for whatever reason, so it's like the campaign is still on, and but it's a pretty the fact is we're in a recession in Alberta, and technically there was a recession in 2015. Then there was a rebound, probably due to the hiring binge that the NDP government went on, and then now we're back into recession again, and it's probably going to impact other parts of Canada as well. There wouldn't be surprised to see a recession across Canada fairly soon. So if we're not already in one, so the anger that people feel is going to just get greater when they see people losing their jobs and businesses going under and stuff. One of the things that just was reported yesterday was the consumer insolvencies they had a 15% increase in Ontario, and then Newfoundland was second at 14.6, and Alberta was third at 14.3% increase year over year. So obviously there's an awful lot of people that just can't make it in this. The surprising one is Ontario, of course. Newfoundland and Alberta aren't really that big a surprise, but obviously there's a lot of people that just can't make it in this economy. So anytime you have that, the anger is not going to go away soon. And I don't see. You still run into people that say, well, now that the NDP government's been defeated and the new Conservative government's in there with Jason Kenney, it's all going to be fixed and we'll be back on the right track soon. But if they're the Jason Kenney government, I think it's going to be hard for them to find the magic formula that gets this thing back on track, because there's a lot of headwinds that are hitting Alberta and Canada, for that matter.
Hilliard, anything else you want to contribute to today's show?
Well, I would point out that I think most people know this already, but Twitter's been a fantastic place to follow all these things, the virus and the economy in Canada and that sort of thing. And I'm quite active on there, and my handle is @HMACBE. And so if people follow me, we'll keep adding more information there. And then, of course, I have my weekend note, which comes out on Fridays usually. And there's always an interesting topic. Probably this week I'll write on the coronavirus and the impact on the economy. So I encourage people to take advantage of that.
And thanks to Twitter, I've just found out BC's chief medical health officer says no new coronavirus cases in BC.
That's great news.
So, yeah. Yes, it is, because I catch everything. Viruses love me. Hilliard, thank you so much for being on the show.
Nice to be on the show.
My guest has been Hilliard MacBeth, author of the second edition of the book, When the Bubble Burst, Surviving the Canadian Real Estate Crash. His website, macbethgroup.com. If you have any questions for Hilliard or any of our other guests, you can send them to info@housestreet.com. Our YouTube channel is Talk Digital Network. Find us on Twitter @Housestreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on Housestreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. Housestreet.com radio is a production of House Street Media Incorporated.